Well, NFP, what the hell happened? We're at the beach again. It's a beautiful day down here. Loads of people and beautiful sunshine here in South Africa. But what the hell happened on NFP Friday yesterday? Well, we got caught short. We ended the day with a small profit, but we gave back quite a lot of the early gains in the afternoon. The NFP number came out. Jobs were hotter than expected, 223,000. And expected with 200, but it was a little bit worse than prior. The markets began to drop down a bit, the Nasdaq, S&P, gold, the euro and so on. But then the ISM number came out and we saw the markets begin to rally and rally and rally, and now we've got bullish engulfing candles all over the show, and it's very hard to know what to do next, but we have a strategy. So stay tuned and we'll find out how we're going to deal with this going forward, what the markets look like going into next week and the early part of 2023. And let's explore all of those things and see how we're going to be trading going forward with the news and the market's reaction. I think that we're still going to be bearish overall. And these are bargain hunters looking for bottoms. And remember, bear market rallies can be severe, they can be sharp, they can be sudden, and quite large. And perhaps that's what we're seeing the beginning of right now. So let's have a look at the numbers. Now, I don't think the numbers in themselves are all that important, but I think the sentiment of the market is, as I said earlier, that people are looking for bargains, people are looking for this bear market to end. And people want some positive news, really. That's what it boils down to. And anything that's slightly positive is likely to cause a market rally. The first number that came out was the non-farm payrolls. And you can see 223,000 jobs were added. This came out at 3:30 my time, which is 8:30 a.m. Eastern time. The expectation was 200,000, so we did a bit better than expectation. And the previous number was 256,000. Now, to put this number into perspective, anything over 200,000 is really high. And we're still in that really good range, 200,000. A little bit worse than the previous month, but still really good. And on that news, the market kind of started to drop because we want to see jobs actually reducing. That's what the Fed wants. They're very concerned about the hot job numbers. They want us to see less jobs being created in order to slow the economy and the rate of inflation down. And so this number is pretty high. That's what created the market drop. However, the glimmer of hope in this was that it was actually worse than the previous month. So even though it was better than expected, it was worse than the previous month. We were on a slight slow downtrend, and the market wasn't too sure about what to make of all of that, looking for any hope in order to rally. And then that was okay. It looked like we were heading down. And then a little bit later on in the day, we got the ISM non-manufacturing PMI. And this number showed a slowdown in the economy. We got below 50. 50 is kind of the basis, the base point. Above 50 is positive, below 50 is negative, roughly speaking. And we were below 50, below expectations and below the previous month. And on that news, the market began to rally. We'll have a look at the charts shortly, but basically we've seen that some numbers coming out, not great on the job side, very good jobs, but not great for inflation, not great for the Fed, not great for interest rate hikes. And then we saw a reduction, really, in the ISM non-manufacturing PMI. And that was the glimmer of hope onto which the market grasped. And that's when we saw the stock markets begin to rally. We saw the dollar began to drop. We saw bond yields beginning to drop. We saw gold beginning to rally, and the euro and the pound and other currencies rallying against the dollar. So that's where we stand at the moment, and we need to discover how big of an impact this is going to have on the market, whether this is going to spark a longer-term recovery in the stock markets and a longer-term drop in the dollar, and perhaps a rally in gold and other metals, and rallies in the euro and the pound and the Japanese yen and all that sort of thing. In order to make those diagnoses and prognoses, we need to go and have a look at the charts, which we'll do right now. So I'm not going to go into too much detail because it's all pretty clear. So let's have a look at the first set of charts. I've got the euro, the pound, the Australian dollar all along here, New Zealand dollar. Then I've got the CAD pairs, euro CAD, pound CAD, Aussie CAD, New Zealand CAD. You'll see a big difference between the dollar pairs, euro dollar, pound dollar, Aussie, etc., compared to those against the CAD. Look at all these candles. This is a daily chart for each one of these. And we've got a big bullish engulfing candle, massive on the euro, massive one on the pound. These are clear reversal candles. There's no doubt about that. We started to move down. We went down, created a new low just around about the time of the non-farm payrolls, and then that big rally when we got the ISM data. So we'll see the same pattern on the euro, on the pound. Look at that big bullish engulfing candle. Same on the Aussie dollar, same on the New Zealand dollar. You don't see the same things against the CAD, so this is definitely dollar related, and you'll see why in a minute because we'll look at the dollar index. But a little bit of a pop-up against the euro against the CAD, pound against the CAD, also a bullish engulfing candle. So pretty bullish on these major currencies, the euro, the pound, the Aussie. See the Aussie popped up against the CAD and the New Zealand dollar. So it's not just against the dollar itself, but it's also against the Canadian dollar. Let's have a look at the yen crosses, and not much activity there. So we saw the dollar yen dropping down a little bit, euro yen, nothing really. Pound yen, nothing at all. Aussie yen, a little bit bullish. CAD yen, nothing. And New Zealand dollar yen, a little bit of a bullish rally. So not really much action happening on the yen crosses in comparison to what we've just seen on the majors against the dollar. And we're actually seeing euro, pound, Australian dollar, New Zealand dollar strength against the Canadian dollar too. So we're seeing a bit of correlation between the US dollar and the Canadian dollar. Now let's have a look at some of these. Big rally on gold, moving right up to a new high, a new recent high. It's a little bit of overextended. If you have a look at the stochastics and some of the other indicators, the distance away from these moving averages, gold is really high, but no sign of weakness. Same with silver, not quite as dramatic as gold. But the dollar index is the most interesting one, and I need to zoom in on this. Have a look at the dollar index. We had hope. We broke out of this range. We held above support. We moved up out of this bearish descending triangle that we saw earlier. We moved out of that, what can be considered to be a sort of a bear flag. We looked like we were moving higher. We got almost all the way up to 105, 105.60, heading towards 105, 106. But after that ISM number came out, the dollar simply collapsed. And we've got a, if not an engulfing candle, a pretty bearish looking picture, falling back down to that red line, 103.50 odd. That's been our support for the best part of 3 weeks now, going back to mid-December. So it's not looking good for the dollar at all. It's looking good for the euro, good for the pound, good for gold, good for everything except for the US dollar. This one, just out of interest, sugar. This is one that I put on up on Twitter. I did a video on it on YouTube, which you can have a look at somewhere on this channel. If you're not subscribed to this channel, do so now. You'll get all sorts of interesting stuff, including trading commodities like sugar and soya, natural gas, and so on, which I trade quite often. So if you're into commodities, or if you're not, if you're just here for the currencies, no matter what you're here for, subscribe, press the notification bell so that you get alerts and become part of this community. Sugar we sold, and you can see, like most commodities, we're seeing a pull back in commodity prices. We've seen the same on oil. We've seen the same on natural gas. That's this one here. Big move down in natural gas. So all of these things kind of working together. There's soya just pulled back a bit. We might be able to sell soya later on during this month. And then US dollar, South African rand, pound, South African rand, not really much, just chopping about. But the interesting thing is the dollar index and metals, moving higher on metals, down on the dollar index, up on euro and pound. And then we've got to have a look at NASDAQ and S&P and the US 30, which is the Dow Jones. And we've got a few other ones here. We've got... don't worry about that one. Amazon, Apple, Tesla, ARC, all moving higher on the day. Quite good rallies on Amazon, Apple. And this all took place after an initial dip, particularly on Tesla. We saw big drop down after the NFP numbers, quite big. Tesla started off the day really weak, having gapped down to getting pretty damn close to 100, back at 114 and a half now. But NASDAQ, S&P, and Dow Jones all rallying off support levels. You can see that double bottom now on NASDAQ, which is ominous for NASDAQ bears. You could a double bottom on the day chart over there, but overall it's a massive bottom, quadruple bottom really, holding above that very, very crucial support at 10,700-ish, and not managing to break below there. So all in all, if you're a NASDAQ bear, you've got to be really careful because we've held above that support. But look where we are, that green line, we've just touched it. We've fell back from it a little bit late on Friday. That green line is a very significant level of supply and demand. If we can get above there going into next week, I think we're going to see NASDAQ and the rest of the stock market go along up with it. So that's where we are. Now, how do we trade this? Well, as I said, that ISM number and the slightly worse than last month's NFP, but better than expected, all very mixed signals. A lot of people got caught short on this market, short across the board really, short on euro, pound, short on gold, short on NASDAQ, short on S&P, long on the dollar index, short on US 30, including myself. And luckily, I only gave back some of my earlier gains on the day yesterday, so we're okay. But the question is, how do we trade this going forward? And I think we've got to view this with a great deal of skepticism in both directions going into Monday. Sunday night will be very telling when the Asian markets open, Japan opens. Sunday night, we're going to see what happens. Are these markets going to move up? Are they going to gap up? Are they going to gap down? Are they going to inch up, inch down? It's all going to actually be really interesting. Sunday night, opening of the Asian market, Sunday night in European time, London time, Sunday afternoon, I suppose, in New York. It's going to be critical to see what happens. I'm not in the business of predicting what's going to happen. I think we're on a knife's edge either way. But if I was to choose a direction right now, if I was going to choose which way I would bet on, if I was forced to bet, which I'm not, and I'm not going to, if I was forced, it would be short the dollar, long everything else.